Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Nigel and Sonia. Guys, hi. Good morning. Middle of the week, and things are looking a little better. I mean, in terms of global cues, most certainly things are looking a little better. Just quickly running into what the big cues are, I think today's session is particularly important after yesterday's surprising fall. I mean, yesterday was a bit of a puzzling fall. The market fell with ferocity, with momentum, when no other markets around the world were falling, right? So a lot of people are still asking the question, what really happened? We'll get into data, etc. in a bit. But in any case, since the price action was what it was yesterday, today's action, price action becomes important. Will we see follow-through, or will we see the markets starting to come up a little bit? So it'll be an important signaling effect. Global cues from overnight are broadly supportive. They're not, wildly bullish, but equities are up about 1%. You look at the S&P, the NASDAQ. Yields went up about 9 basis points, but I think the bigger cue is dollar. The dollar index is around 103, a little over 103. It went up about 0.25%, but this is small, nothing very large. There was that sort of Fed Chair Powell speech, but there was nothing from it. No new insight in terms of the trajectory for monetary policy, or him commenting about the recent economic data, etc. The weakness in economic data. It was about central bank independence and political sort of interference, non-interference, and that kind of thing. So no real implication from a market perspective, really. So we are kind of left to our own devices in light of sort of absence of big global market moving cues. The Nifty, to begin with, has the 20-day moving average as the first big resistance, which is at 18,159. This becomes some distance away, but not very far away as well, about little over 150 odd points away from where we are. The big number, which is the swing low, the weekly swing low of 17,774. This was made on the 26th of December. That also is in sharp view. That kind of becomes the kind of sacred line which must hold. So 17,774. I think that's the number which I think you must keep at the back of your mind in case there is some selling which starts to emerge. On the upside, this is a 20-day moving average. On the Bank Nifty, I think the structure is a little more weakish as compared to the Nifty. The Nifty did not break last Friday's low. The Bank Nifty did. The Bank Nifty broke the low of 41,877, which is the Friday's low. It closed below Friday's close as well. And that's why I'm saying maybe it's a little more trickier here on the Nifty Bank. Near term, the low of 41,569, which is the 26th of December low for the Bank Nifty, that remains the level to watch, the crucial level to watch. And on the way up, there is the swing high of 42,717, which is nothing but yesterday's high, because the market did a bit of a swing kind of a trade yesterday, went up and then kind of cooled off. And then above that, you've got the 20-day moving average at 42,889, which comes into play. So those are broad levels to watch, both on the Nifty and the Bank Nifty. Not very much in terms of big cues from the global arena. Maybe as we proceed through the course of the session, we will get some, but so far, not very much. It's a tentative start, which the SGX is indicating about a 24-odd point gap up, 18,010. Sonia, hi. Nigel, hi.
Hi, Prashant. Morning. Nigel, morning. Yesterday was a very disappointing day, right, for the bulls. So it's important to see that with today's positive moves, does the market use it as a selling opportunity? Because that's been the case. The texture of this market has become weak. So although you might see a positive up move today, it's better to just be a bit cautious after what we've seen in the past few days. Now, yes, the global handover is very strong. The Dow went in the green. The NASDAQ has been up for 3 straight days now. Even Asian markets are well in the green. But on the index, on the Nifty yesterday, there were fresh short positions taken, both on the Nifty and the Bank Nifty. We barely managed to close above that 100-day moving average of 17,900. So it would be interesting to see if that gets tested once again. Now, if this 100-day moving average breaks, then the December 26th low of 17,774 becomes a crucial support level on the index. And they do say that if levels on the lower side get tested more than twice or thrice, then that eventually gets broken. So just keep an eye out on that. There was large selling once again. FIs have been selling now for 13 days. Large selling of 2,100 crores yesterday. In terms of individual stocks, some names like Tata Motors saw a little bit of short covering, but I'll also be watching out for the IT names, because tomorrow you have both HCL Tech and Infosys reporting their numbers. And after TCS is showing, there perhaps could be some trepidation over there as well. And then you have big numbers, HDFC Bank, Asian Paints, ICICI Bank. But for the market, the sense I'm getting is the muted opening is what you can expect. The SGX Nifty is indicating a muted start, but the texture of this market has become weak. There's no two ways about that. So will this be used as a selling opportunity? It's been all over the place, really volatile. So what are the cues that you're picking up?
Well, a couple of observations with regard to yesterday's trading session. Normally, we see the Nifty ending down by 180, 200 points odd when the net institutional number is rather large. That's around 1,500 crores or around 2,000 crores odd. Just take a look at that. Yesterday was a little bit odd because the institutions, well, they net sold close to 300 crores. And yet we were down close to 200 points odd. So was there, other large participants, the HNIs or retail-led sell? It looks like, at least as of yesterday, that the selling or the downtick on the Nifty wasn't led by institutions. That is what it appears like. Now, the Nifty Bank, that's the sore thumb in them. In the last few sessions, it's underperformed. Yesterday as well, it kept up its underperformance. Is it done with that? We need that to bounce to see a bit of an up move. The FI data, well, it's bearish. On the index futures, well, they added close to 27,000 short contracts. And that's, close to around 35% higher on that low base. So massive short positioning out there. And on the index option side, well, they wrote calls very, very aggressively. So they have very bearish news coming from the FIs. I'll tell you what, that's not such a bad thing. If you can get any kind of good news, given that we're at the lower end of the band, we could see a bit of a bounce. Now, what were they writing? 18,000 call, 18,100 call, as well as the 17,900 call. And they're writing it very, very aggressively. Going by the aggression that we've seen on the call writing side, well, the PCR has come back down to the lower end of the band. That's around 0.7. Remember, the last many months, when we go to 0.65, 0.7 odd, normally you get a bit of a bounce. Let's see whether or not that plays out yet again. Support level, that's fixed. The recent lows, you get it at around 17,800 odd. Resistance comes in at around 18,050. Going by the call writing, we are seeing at around that 18,000 call odd. You want to trade above that 100 DMA and then make a bit of a dash. SGX Nifty is suggesting a start in the green. My guess is that at some point of time, we move into the red, you get a bit of an intraday dip. And risk reward could favor a buy. Why is that? Because we're at the lower end of the band and the PCR has come down to around 0.7. Provided that 17,800 is held out, I think maybe we could, again see a bit of a relief rally.
All right, Nigel, thanks for that. As we've been saying, yesterday was a bit of a puzzling fall. I really thought that the day before yesterday's price action, after last Friday's big sell-off, we will have a little bit of continuation yesterday, but it was a complete dump. So in that sense, today becomes important to just gauge what's the market and the screen itself kind of telling you. Before we go any further, let me quickly sort of tell you what's lined up here in the first half hour of the show. We will get you updates from markets across the globe. Steve Englander of Standard Chartered Bank will join us to discuss global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30 a.m., we will have a fundamental stock analysis with Devin Choksi of KR Choksi. We'll talk stocks which are moving and stocks which can move. That's coming up.
All right. Well, let's kickstart the show first up with an equity view coming in. We have Venugopal Gare of Bernstein, who says that India's fortune hinged on what happens to the rest of the world, as the self-help drivers for India are limited this year. He says the best case for India is a global recession on a larger scale, as India will shine then, but that is not a base case we are working with. He says they are conceptually looking at a mild recession, enough to ensure no meaningful increase in commodities and crude, helping protect a material downside for the market. He also says they are generally optimistic about the real estate cycle and the potential for a better rural environment. He upgrades durables to an overweight and retains an overweight on the cement sector.
Well, these are views on the money market. This is coming in from Kunal Sodani of Shin & Bank, who says inflows from bond selling and stop losses getting triggered broke the 82 mark for the dollar INR pair. As expected, narrow consolidation gives a more sharper move in the rupee. Dollar index has dropped 2% in the last two trading sessions, and Brent crude prices are consolidating. U.S. Consumer price inflation for November number on Thursday will be eyed closely. For the rupee, Kunal sees 81.4 as a support, while 82.1 is the resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields initially traded higher on mutual fund selling and fear of strong U.S. non-farm payroll data, but again recovered on a lower than expected SDL auction and softer global yields. For the rest of the week, he says markets will take cues from domestic, U.S. inflation and Fed Chair Powell's speech. He also says the 10-year benchmark bond yield is expected to trade in a range of 7.3 to 7.35%.
Well, we've got a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Adani Wilmar, Bharat Dynamics, Bharat Electronics, Astra Microwave, Data Patterns, Solar Industries, Uttam Sugar Mills, Tata Motors, Adani Ports, as well as IEX. They are stocks on the back of positive news flow. And maybe, in fact, we may not have too many stocks that are likely to open up in the red.
Okay, well, let's listen to Fed Chair Jerome Powell. And this is him on price instability and central bank independence at the symposium in Stockholm that he spoke at overnight. I mean, in terms of monetary policy, not very much in terms of new insight. Listen in.
The case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy. The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. It is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations.
All right, that's the Fed chair. Now, Steve Englander is global head of G10 Forex Research and North America Macro Strategy at Standard Chartered Bank. Steve, great to have you on the program. Thank you very much for your time. Let's just start with your views on where the dollar is headed. And let's take the dollar index, the US dollar index as a measure. What is your sense, Steve? It's been, to some, surprisingly extremely weak. It's given up pretty much all of the recent gains. Are we headed a lot lower? Because that has got implications for portfolio flows into emerging markets. Go on.
Well, we think it's headed lower. It certainly has gone faster than we expected, but the forces behind the move are the forces that we expected to be there, just playing out quicker. It will have an impact on emerging markets, but in the first instance, we think it's mostly a G10 move. And in particular, we think Asian currencies could lag a bit, possibly excepting China, but looking at non-China Asia currencies, the case for them kind of leading dollar weakness is not strong. We like the euro stronger. We like the yen stronger. We think Aussie could be stronger in coming weeks. And again, I think we would say that there's some risk in the dollar having moved as fast as it did, but we don't think that the moves are unjustified, and we think that there's more to come.
Okay, Steve, hi, good morning. Let's talk a little bit about what your expectation is from the Fed. Is there a stronger case for a smaller 25 basis points rate hike in the February meeting of the Fed if the CPI data out tomorrow indicates a softening of inflation?
Well, I think that's a very strong case. Even if it comes in, say, 0.3, which is in line with the market expectation, I think the signal that the Fed is sending is that they would much rather move less and keep it steady for an extended period than move further sharply up and then have to cut sharply later in the year. So, I think that the market is waiting to see what the CPI says. And I think even if it comes in line with the market expectations, say core at 0.3, we could see the dollar weaken off that as the market draws the conclusion that inflation is indeed slowing, and it's just a matter of time till it slows further.
All right, Steve, a couple of questions out here. For the year, how many rate hikes are you factoring in from the Fed? Point number one. And the dollar index, I recall the last time you joined us, you were suggesting that maybe the dollar index will weaken, and that's precisely the way it's played out. We're at around 103 odd. Is there a level you're looking at on the dollar index?
Well, we actually expect only one more hike, and we expect 25 basis points at the end of January, February 1st. But I think it's the drivers that matter, and I think that in a sense there's a consensus both in the market and probably even at the Fed that if the economy begins to slow down, markedly, that the Fed is going to pause. Now, we think that the data in the next couple of months will be slow enough that they pause, in March. The market thinks it could happen by September. The Fed, by the middle of the year. And the Fed is sort of a little bit reluctant to commit on that. But in some ways, I think the market is waiting for a shoe to drop in terms of an economic slowdown. That would be the trigger for that kind of slowing. So, as I said, we expect one more hike of 25 basis points, followed by ongoing slowing in the economy. In terms of the dollar, we think that probably about 3 to 5% more weakness on the dollar, in the course of the year. Risks actually maybe even to the upside on that. The U.S. cycle, we think, is slowing. Europe is outperforming. China is reopening. That's going to have an impact on the rest of the world. The dollar did very well last year when the U.S. cycle was ahead of the rest of the world, and now that's changing.
Okay. Steve, so, in terms of the other side, right, we're all focused on rates, and you said maybe the Fed pauses in March. So two questions. One, they pause and then hold rates where, they will be in March through the end of the year, or they, in your opinion, they cut at some point? I think the market pricing indicates 50 basis point cut late into 23. That is one. And second, when you say that the market is waiting for the shoe to drop, which is economic growth slowing significantly, will it be sharp slowing? Because that will be negative equities, right? It may mean another thing for rates. So quick views.
Yeah, not sharp slowing, but, it's sharp enough to get the unemployment rate up. And in fact, we think, kind of the signal for the Fed to start easing slowly would be, say, if the unemployment rate went above 4.5%. So that's probably a late 2023 type of move. But we don't think they're going to cut rates fast, and we don't think the economy is going to slow in a dramatic fashion, but it will slow and the unemployment rate will go up.
All right, Steve, we will leave it at that. Thanks a lot for joining us. We got the point. Fed is perhaps going to go slow on rate hikes. And in the February meeting, you're expecting just one more hike of 25 basis points. Let's see. The inflation data out tomorrow will indicate whether inflation is cooling or not. And then perhaps the Fed can go slow on rates. That's the narrative, at least. Let's slip into a quick break. On the other side, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Well, is there a case for a strong pullback today given the global handover and the positive cues there? Only time will tell. For now, the SGX Nifty is looking like a muted start, and we had quite a disappointing day yesterday. Our research team is here to give us a list of top 10 stocks to watch out for. First up, we have an update coming in from Adani Wilmar. So let's go straight to it. Mangalam, how did it look?
Well, for their FMCG business, it was extremely strong and decent for their oil business. The overall revenue for the company grew in high single digits. The edible oil, which is the mainstay of the company, actually volumes out there grew in high single digit. But we all know the decline that we've seen in edible oil prices after the big rally that we saw in that. So as a result of which, the value growth is just low single digits. The companies passed on the price cuts to the consumers. Food and FMCG volumes grew high 20s. Prices have actually grown by over 40%. So in value terms, it's grown mid-40s, and that's a big positive because that's the higher margin business for them. Industry essentials as well saw a revenue growth in high teens. The company said growth has been broad-based across both urban as well as rural, but the saliency of urban has been much higher. B2C oil sales have actually been in high double digits, and it's the institutional demand for oil which was weak, as a result of which the overall edible oil business grew in just single-digit volume. But I sense the stock could see mild green in today's trading session.
Okay, all right. Mangalam, thanks a lot for that. Mild green on Adani Wilmar. Stock ended lower with the cut of around 2.5%. Vahista is with us to run us through a few stocks in the news. Morning, Vahista.
Good morning, Nigel. Actually, the defense stocks are expected to be in news today. This is because of an announcement yesterday wherein the Defense Acquisition Council has approved the acceptance of necessity. This is for 3 capital acquisition proposals summing to approximately 4,300 crores. And the 3 proposals include 2 for the Indian Army and 1 for the Indian Navy. Now, this includes the procurement of Helena anti-tank guided missiles, launchers and associated support equipment which will be integrated to the Advanced Light Helicopter. Also, there is a procurement of IR homing missile system under the design and development by the Defense Research and the Development Organization. Now, the likely beneficiaries from these developments could be Bharat Dynamics, Bharat Electronics, Astra Microwave Products, Data Patterns and Solar Industries. Back to you.
Okay, thanks a lot for that. Well, let's go across to Sonal now. She has some more stocks that are in the news. Sonal, what are you looking at this morning?
Good morning, Sonia. I have 4 stocks on my radar. Let me start with Uttam Sugar because they have gone ahead with a capacity expansion plan. They will be increasing their ethanol capacity from 150 kiloliters per day to 250 kiloliters per day at their Barkatpur plant. The capacity will be added by December 2023, and the total capex on this particular project will be 56 crore rupees. The company says this will be financed via internal accruals, and they will also be taking loans under the interest subvention scheme as well. The next stock I'm focusing on is Tata Motors. They have completed the acquisition of Ford India's manufacturing plant situated at Sanand in Gujarat. This is the wholly owned subsidiary which has done that, Tata Passenger Electric Mobility Limited. Adani Ports, one more completion in terms of acquisition. The Haifa port has been completely acquired and the acquisition has been concluded. Now remember, the consortium of Adani Ports, SEZ and Godot Group had completed the acquisition, and the concession period for this port is up to the year 2054. Lastly, watching out for IEX, they had announced their plans for buyback, and today is when the buyback opens. The buyback price is 200 rupees per share. The current market price is around 140 rupees per share. The total buyback size is 98 crore rupees, and it will be done via the open market route.
Okay, that's the IEX buyback. Thanks a lot for that. Here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow. There's Adani Wilmar, Bharat Dynamics, Bharat Electronics, Astra Microwave, Data Patterns, Solar Industries, Uttam Sugar Mills, Tata Motors, Adani Ports and Indian Energy Exchange. Well, guess what? There are no stocks on our radar with negative news flow. Well, that doesn't mean that stocks are not going to be in the red. But in any case, a lot of stocks come with positive news flow this morning. But let's go across to Manisha Gupta. She joins in now. She'll give us a quick check on what's been happening in the world of commodities. Brent has been trending lower. So what's the latest there? Manisha, good morning.
Morning, Sonia. Well, that could be positive for the equity markets yet again because we've seen $75 break on the lower side for the U.S. crude oil prices. That is because the U.S. inventories have surged by 14.9 million barrels. Markets were anticipating a surge of 2 or 3 million barrels. So this is way higher and is weighing on to the prices. Also, when you look at the Fed officials overnight, they have all echoed the same remark on rates higher than 5% and higher for longer. That's exactly what the JP Morgan also said, and that's what's weighing on as well. It is a weakness in US dollar, though, that seems to be supportive, especially for the metal prices in the meanwhile. So whether it's coal, silver and the other industrial metals, they still seem to be doing well, still trading in the positive for 2023. The Chinese demand, the restocking ahead of the Lunar New Year holidays is something that is supportive for that sector.
All right, Manisha, thanks very much for that. So that's commodities in focus. We'll take a very quick break here. Up next, Devin Choksi of KR Choksi will be with us for some fundamental stock talk. Later, we will connect with Ayush Gupta of KRBL to talk about the government's decision to review the export duty on rice. Stay tuned.
Hi, welcome back. Well, exciting times. We have the Auto Expo that begins later, that has begun. Actually, we'll get you some images in a while from now. And after 3 long years, the Auto Expo is back. So very interesting there. My colleague Parikshit is right there at the Auto Expo. So in a bit, we'll get to that. But we also have Deven Choksi joining us now to discuss some stocks. So let's go straight to it as well. Deven, good morning. I wanted your thoughts on Adani Wilmar. Mangalam was just telling us about the Q3 business update. And this is a stock that you track closely. Any thoughts on how to approach it?
Yes, Sonia. Good morning. Well, I think the trouble time.
Oops, I think there's some issue with the audio there. We'll just come back to that in a bit. So, Deven, let me just try and resume that conversation with you. But one word on what's happening in the global markets. The Asian markets actually picking up quite a bit of pace. All indices, Hong Kong, Shanghai, Kospi, Nikkei are all in the green. In fact, the Nikkei market is now up over 200 points. So, and Hang Seng is up over 300 points. So it's looking pretty good from a global market perspective. The Dow futures as well are indicating on some platforms that there is a bit of green on the screen. So let's keep it there. Deven Choksi is back with us. Deven, you were telling us about Adani Wilmar. Go ahead.
Yes, Sonia. I think the second quarter was probably, the most challenging quarter for the company, wherein they had a situation of high input cost and lower realization. In the third quarter, probably the growth has remained on a stronger side. They're just close to double-digit kind of a growth in the volume. And according to me, with the softer raw material prices, particularly in the edible oil refining segment, I would think that this could possibly mean relatively better margin for the company in this particular quarter. As such, their foray more into the food side, the food product side, is definitely more encouraging, and I see a possibility of they going for inorganic growth in this direction as well. So from a perspective of looking at the company from next 2 years, it should be a good story to buy into. Both Adani Wilmar and Patanjali, both of them are looking interesting stories to hold into the portfolios going forward.
Deven, hi, good morning. Just a few names coming your way. I don't know if you track them. There is Max Financial, which, the news came through that Axis has reworked its agreement with Max Financial to buy the remaining stake at a fair market price. Stock jumped yesterday. It was our story, and it got confirmed yesterday. So it's of course, the valuations have come up, but I still think it's the cheapest life insurance name. Then there is Rate Gain, which moved up quite aggressively. There is a new initiation. That's a travel SaaS company. So any thoughts, these two?
So Axis Max, is a strategically good transaction, particularly for Axis as a whole. Having acquired the balanced 7% stake, they are basically now relatively much settled as far as the recovery of this investment that they have made. I believe that the larger part of the recovery should be made out of the commission that they would be receiving from distribution of the insurance product. And also, some part of the recovery should be seen coming in from the investment that they have made from the dividend distribution that may happen from Max side. So from that perspective, the opportunity looks, okay for Axis at this point of time. I'm not sure how much it is already priced into as far as Axis is concerned. And since Max we don't track, so I'm still not aware about how much it is priced into as far as Max is concerned. But understanding is clear that it is relatively a better deal for Max at this point of time to receive this kind of funding and probably be part of the larger distribution game plan of Axis.
Okay, all right. Well, Deven, request you to hang on. We'll come back to you. For the time being, we're just getting our first corporate on the show. Well, the sources indicate that the government is reviewing the export restrictions imposed on rice as domestic prices stabilize. Remember, India had imposed closer on 20% duty on exports of white and brown rice in September. They've also banned broken rice sales abroad. To understand more about the sector, as well as understand further aspects on the company, that's KRBL, we are joined by Mr. Ayush Gupta, the business head, domestic business, who joins in. Hi, Ayush. Good morning. Thanks so much for joining in. Well, Ayush, a couple of factors out here. Directly, we understand it doesn't affect KRBL. But indirectly, could it have some repercussions on your business or on prices?
Definitely, though KRBL operates largely in the basmati sector, but non-basmati prices export on non-basmati in export markets, ban on non-basmati in export markets will definitely have, minor effect on basmati rice demand and prices domestically as well.
So can you give us some numbers, Ayush? How are the prices currently for basmati? And in terms of realizations, your realizations were up almost 42% in the quarter gone by. Oops, okay, I think we snapped that video with Ayush. That's quite a short chat, was it? All right, we'll get back to KRBL in a bit. But I think Deven is still with us, so let's get a quick comment from him. Deven, any thoughts on these stocks? I mean, the fact that India is lifting rice export curbs, supply will of course improve. But as you know, some of these guys said, it really doesn't impact the basmati business in a big way. Any thoughts on, from a fundamental standpoint, do you like these companies?
Sonia, I think we don't track, this particular business enough, so wouldn't be, very comfortable talking about, some of these business models.
Okay, all right. So we'll keep that aside. We'll try to reconnect with the management. Deven, what about the defense stocks? They had a good 2022 odd. The order books are swelling up as well. Yesterday, there was another green nod in the right direction. And a few beneficiaries could include, direct beneficiaries could include BDL. Well, the other ones could also be data patterns and solar industries. Any sense on this space, whether the direct or the indirect plays on the defense sector?
Yeah, I think we are extremely convinced about, the entire defense story which is unfolding. Fortunately, in the entire listed market universe, I think you don't have too many names, I would say, which are basically, with a very large size market capitalization. So there is enough amount of opportunity for investors to walk into. The companies like solar industries, which we closely track, we believe that this particular company has already cleared a long gestation period of getting approvals from the defense, and probably they already started their business with defense, in a systematic manner. Generally understood that in defense business, the long waiting period is there for approval. And those companies who have cleared this particular period, they are relatively better off in this particular period. So from that perspective too, we like solar industries, solar explosives, which is basically remaining very strong play on the defense play. Other side, data patterns and other companies have relatively good positions to talk about. I'm not too sure, how much one could possibly talk in terms of numbers, because the gestation period, as I said, would remain 3 to 4 years for any new product launch that they would be having. So that part, we have to carefully evaluate it. But otherwise, remains, a story which one should be buying into the portfolio select.
Okay, well, just stay on, Deven. I think we have resumed that conversation with Ayush Gupta, who's the head of the domestic business at KRBL. Ayush, there was some issue with your video. Hope, we can get through to each other now. Tell us a little bit about the prices itself. What is the expectation on the basmati side? And your realizations were very strong in the quarter gone by. Do you expect a further uptick?
Yes, basmati rice prices, have consequently increased significantly, in the last couple of months. And I would say owing to lower crop production this year and high demand in the domestic and export markets have led to this increase in crop prices. So definitely realizations will go up in the subsequent quarters.
Okay, realizations will go up in the subsequent quarters. Got that. So tell us a little bit about what the expectation is, in terms of growth, because in Q2, you had a volume market share which was around 32%. What kind of volume market share gain are you expected to see for the full year? And what is the expectation as we move into FY24?
As we speak, Mac, November 22, our volume market shares have already risen to a level of 35.4%. And we're hoping these, the market share will inch towards the 40% mark by the end of this financial year.
That's FY23?
FY23.
So in the coming quarter, you're expecting your market share that we last recorded 30 to 33% to move to around 40%. We're getting that correct, right?
Closer to 40%, yes.
Okay, all right. Ayush, procurement season, well, it just ended. If you could tell us how much procurement was done this year in comparison to last year. Also, give us a sense about pricing. How much has it been?
So procurement, as far as KRBL is concerned, our procurement levels have moved up almost by 30-35% compared to last year. And pricing on the procurement front has gone up by almost 15 to 20%.
Oh, okay. So there's a market share gain. You're looking at 40% market share. The pricing has gone up by 15 to 20%. Tell us a little bit about what this means for your revenue growth, because I think you have some expansion plans where by April of this year, your plant in Gujarat is expected to start operations. How much are you expecting from there, and what would this do to your full year revenues in FY24?
See, the plant in Gujarat that will get in operation is mainly for the non-basmati segment of the local crop of Maharashtra. We have already started the test marketing for that in the domestic market, and we are expecting close to 10,000 to 20,000 tons of extra volume to be garnered in the first year of our business from that operations.
Okay, all right, Ayush, a couple of quarters ago, or quite a few quarters ago, you all had put out a presentation where you all are talking about revenues of closer around 8,000 crores in the next 4 to around 5 years. Now, as per the last recorded number, it's way lower than that. So if you could tell us, you're done, I think, last year on 4,200 crores, or this year there'll be a growth. By 2025, same, what kind of a revenue number are you looking at?
I'll speak for the domestic market. We are currently at, we closed last year at 2,100 crores. We should be seeing a significant rise in revenues this financial year. By 2025, looking at our initiatives in the regional market space and also looking at our initiatives in the basmati space, we are expanding rigorously on the top line, and we should be inching towards, I would say, 3,000 to 3,500 crore mark by the 2025 year.
That's the domestic market?
Yes.
And what about overall as a consolidated entity? On quarter 2 FY20, I think this presentation was put out where you all were talking about 8,000 crores odd. So is that doable as well? If the domestic business is going to be around 3,500 crores odd, can the overall business be in that vicinity of around 7,500 to 8,000 crores? And by which year?
Yes, I think the export markets, the export sales have also started to pick up in the last 2 quarters, and that business is also on the upswing. So we should be somewhere between the 7,500 to 8,000 crore mark at the overall KRBL level.
Okay, all right, Ayush, we will leave it at that. Thanks a lot for joining in, and all the best with your plans. That's KRBL, quite aggressive in their expansion plans, and they're looking at their market share has risen to about 40% in the domestic space. They're looking at a good rise in their overall revenues as well. Devin, I know you don't track this one, but based on what you just heard from the management, do you think this entire space is looking good, or would you avoid it entirely from a long-term investor standpoint?
From the long-term investment point of view, I think you definitely required to know the cyclicality of the business, I think, which I'm not good at. But at the same time, I think in a situation like this, where I think they have been able to expand their market share and I think generate higher amount of volume share in the business, along with the price increase, I think both of them are sweeteners, as far as I think the business is concerned, and that should reflect well into the profit performance of the company. But as I've said, I think we don't track the company, so I would not know enough about the valuations and how much it is priced into, how much this news is priced into the stock. So that is why I'm refraining from giving any view on the subject.
We'll do one thing. We'll take a quick break on that note. Thanks, Devin, for that comment. Before we take a break, let me tell you what's lined up for the next half hour of the show. Anuj Singhal will be with us to give us a quick trade setup. Post that, we will bring you some of the top stock picks of the day from our technical experts. We have our F&O experts coming through as well. That happens at 8:55. After that, Prashant will bring you the Market Laser segment, where we analyze stocks and sectors through a technical lens. And later, we will decode the stock rally with our Momentumizer segment. At 9:10, Nimesh will be joining us with the standout brokerage report of the day. And before the market opens in CNBC-TV18 Stocks Board, we will highlight all the top stocks in the news to focus on for the day. You don't want to miss this one.
Okay, welcome back. So we are about 14 minutes away from the pre-open session, and the SGX is still right there. I mean, almost unchanged from when we started at 8, 24 points higher. is what we have. Devin Chokshi is still with us. Devin, the other part of the market which is continues to sell off is the public sector bank space. Yesterday was a big day, big red day actually, right? PNB, Bank of Baroda, IOB, UCO Bank. We're talking about 6, 7, 8% kind of cuts. Anything you like here? And SBI doesn't count. Ex-SBI, anything in the space that you find attractive? Go on.
So I think Bank of Baroda would remain, I think, quite an attractive proposition given the size, given the kind of a strong liability side that they now have. And at the same time, I think the kind of corporate customers where the credit lending is now picking up in a systematic and sustainable manner. So this is one bank, I think, which should be seen in your portfolio along with SBI. Also, I'm expecting that in the budget, possibly some roadmap will have to be announced by the government for consolidation of public sector banks further, and I think making even, I think, the smaller number present with a larger AUM book. Largely because of the fact that if India has to progress on higher amount of growth trajectory that the government has spelled out, I think some of the lending institution will have to be of a bigger size, and the smaller size institution probably may not fit into this requirement of the country, which basically, I think, moving at a rapid speed on infrastructure building. So from that perspective too, I believe that Bank of Baroda could end up attracting some of the banks into it and probably create a larger AUM book going forward. This one bank, I think, which we remain convinced about, I think, the quality. So that is where I think we are putting money along with SBI in Bank of Baroda.
All right. Thanks a lot, Devin, for that. Well, we're just heading into the pre-opening rates. Will kick in about in 10 minutes from now. Let's see how things go. Yesterday was a very weak day for the bulls, and today indications are that the stock may be mildly in the green. Anuj is joining us to give us a sense of which way things are headed. Anuj, the texture is looking a bit weak after what we saw yesterday. So what do you reckon could be the market trajectory?
Morning, Sonia. Must say very colourful studio right now. You know, I'm looking at Nigel and you. Prashant must be feeling a bit, odd one out right now.
We like to brighten things up.
Okay, whatever works, right? So, anyway, the market is playing a game of ping pong. I mean, I could have used table tennis, but China is doing well, so I thought let's use ping pong. In 3 days, market's been trapping option writers on both sides. You saw that on Friday, you saw that on Monday, and you saw that on Tuesday. Essentially, it's in a range, 17,800 to 18,200, selling near 18,200 and buying near 17,800, both working. So you're back to 17,800. So again, you need to follow the market's message if buying near 17,800 is working or not. The bigger move will happen only if one of those two levels are taken out. But the bigger problem for market is FI selling, and this time it's not being matched by exact number in terms of the DI buying. So I think that's something to keep an eye on. And my sense is the stocks related to China, especially metals, could continue to do well. On the Nifty, there's a powerful 20-day moving average halt that the market is confirming again and again, and this 20-day moving average is declining. So in that sense, the rallies will always be suspect whenever you have rallies. In terms of support, yesterday's low, 17,856 is the first support, and then the big support is the December 26 low of 17,774. Again, this is not a zone in which you want to short because the market bounces back from this zone. At least it's done that over the last few days. I think the bank Nifty is something which is very interesting because it's showing signs of giving up leadership. It's broken 10, 20 and 50-day exponential moving average. And this month, while Nifty is down only 1%, the bank Nifty is down 2.5%, which is not the case in 2022. 2022, every time you saw Bank Nifty outperforming. This time, it's slightly different. And the reason is ICICI Bank, the way it's broken down and is now approaching its 200-day moving average. For the market to really have a sustainable bounce, ICICI Bank needs to really bottom out and move up. Whether that happens or not, we'll find out. In terms of levels to watch, Bank Nifty, by the way, yesterday's low was 2023 low, which is not the case for Nifty. And the 26th December low for Bank Nifty is 41,569. I think that's the Lakshman Rekha or line in sand, as I call it.
Okay, all right. Thanks a lot for that, Anuj. We have a little bit of a colorful studio. Let's hope it's a good trading session as well for the bulls. Well, let's move on then. Sudarshan Sukhani joins in to give us the quick technical trends. Well, morning, Sudarshan. And then we go to Mitesh as well. Sudarshan, tell us first, how do you approach the Nifty today? Yesterday was a bit of a down day, but we're at the lower end of the band.
Yeah, good morning. See, Nigel, the Nifty is now in a very narrow trading range. A narrow trading range becomes untradeable essentially because the markets are moving in just 200 points. It's very difficult to identify a trend then enter that trend, and then to carry that trend to a point where some money is made. It's not easy because the range is so small. This entire process it doesn't happen in such a narrow range. So we have support somewhere yesterday, somewhere a short-term support is somewhere around yesterday's low, 17,870, and 18,130 is yesterday's high. So this is a range which I would consider as a no trade zone. You know, this 160 points is not going to give us something much. So be patient. Either the Nifty takes out 18,130 on the upside, then a long trade opens up, or it starts falling below 17,870, then a short trade opens up. And between these two levels, I think you can do whatever you want, you won't get much. The Bank Nifty, as Anuj rightly said, is now underperforming, is a complete avoid.
We'll just come back to you in a bit. Those are the first visuals of Maruti's first electric SUV, the EVX, that's being unveiled at the Auto Expo right now. The hype is real because, you know, Maruti is rather late in the game within the electric vehicle space, and this is a concept that Maruti has unveiled. The launch will be in 2025. So there's a big investment. 10,000 crores is what Suzuki is investing in this whole concept. It's an electric SUV. And remember, there is a lot of competition in this space already. Tomorrow, Hyundai will be launching another EV, and Hyundai already has two EVs in the Indian market, the Kona and the Ioniq 5 EV crossover. But this space is really heating up, and this is Maruti's first attempt at an electric SUV. How does it look, guys?
Looks great. So now you're going for it. Will you be going for any of them? I mean, as of now, it's a concept car. But Prashant, you know, Sonia's been testing these cars, posting these flashy images as well. I'll have to track her when she comes every day, actually. You know, when I'm parking my motorbike, I wouldn't be surprised if she's jumping into one of them.
I mean, the front of the car is a little different, right? I mean, I don't know. I mean,
it's a new concept, yeah, absolutely.
Prashant, give us your quick take. Little different.
Are you buying it or not?
No, do you like it or you don't like it? That was
it's about the Auto Expo, right? my experiences from China.
Oh my God! Look at the number of reporters rushing there, right?
Oh yeah.
But it's really going to be an interesting year. There are 25 new launches coming up this year. So many in the electric vehicle space, and thousands of crores is being invested in this space, right? Yeah. I mean, Mahindra was telling us about huge investments there. Maruti is looking at 10,000 crores of an investment. The only problem, I think, is charging infrastructure. That's the only thing. Yeah. Everything else is sorted. Range anxiety sorted out, battery power sorted out, cheaper batteries. Maruti, in fact, this car is expected to be in the 10 to 15 lakh range. So it's not even that expensive anymore in terms of an electric vehicle. The only problem is charging infrastructure.
I think they priced it well. If it's going to be in the 10 to 15 lakh range, I mean, you know, middle class, I mean, we can go ahead, at least give it a look, you know, so. But I'm worried about the charging infrastructure and also the upkeep after that. You know, in case something goes wrong with the vehicle, I'm not sure how it goes. For the time being, I'm happy riding my two-wheeler. But that'll be interesting because post-sales are going to be very important for all these EV vehicles.
Yeah. No, I mean, actually, at least I am noticing a lot of charging infrastructure in societies, you know, newer societies which are coming up. I mean, they have these charging points. It's actually fascinating to see cars standing there, plugged in. And
a lot of people do home charging as well in other cities.
So it'll take time,
you know, the only thing I'm watching out for is tomorrow, Hyundai is going to launch an EV, and that's on the Creta platform.
Oh.
So Creta being such a successful car, this EV is going to really challenge the market and going to make, you know, huge penetration over there. But let's do one thing. Let's take a quick break. We've gone on a goodish bit with the Auto Expo. When we come back, we will talk to our technical experts about their picks, and we'll also have Nitin Agarwal of Motilal Oswal to talk about the insurance data for December. Stay tuned.